Welcome to another episode of Lunch with the Shark. Join us as we dive deep into discussions about business, accounting, and finance to help you build a business that thrives. Now sit back and have a bite with your host, the Shark CFO, Vidal Espinosa.
Hello, good afternoon, and welcome to a new edition of Lunch with the Shark. I am your host, Vidal, the Shark CFO Espinosa, and I have my co-host right behind me. He actually decided to fall asleep prior to the show, and he is napping right now. Say hi to Captain Crunch, and I say it slowly because we don't want him to wake. We don't want him to wake up because he actually starts working around 4:30ish. He has a very important job, which is making sure nobody goes in front of the house. That's his job at 4:30 p.m. every single day. So right now he is resting, enjoying a nice nap prior to getting in, going to work. So we have a co-host behind us. There he is. Um, he's relaxing like we should. I think he opened his eyes because he heard a little noise, and he's going to be hearing about today's topic. So tell me, what have you guys done so far? It's already Thursday. It's already Thursday. Welcome to October. October is the most wonderful month in the whole year, followed by December because we is there. But October has the best moons ever, and it's the birthday of the best people in the whole wide world. October, remember October 10th. Pretty soon will be my birthday. I won't say how many years until my birthday. So, welcome to October. Welcome to the first day of the fourth quarter of 2020. Yes, damn. Isn't that crazy? How the year has flown by. We are only 31 days away from the presidential election in the United States. And very interesting comments yesterday after 2 days ago, presidential debate, if you can call it a debate, and memes going everywhere. It's funny. But hey, whatever rocks their boat, right? So I hope you're having an amazing day. I hope you have started analyzing your plans for the last quarter, making adjustments, starting your planning for the next 10 years or more, minimum 5 years. And let's keep the momentum going. Let's keep this going. I know that there's a lot of concern about employment. Now the airline industry, it's going to hurt more. Congress did not agree on a new package to support them and help them. And I don't know how to feel about that. But do you know what? Everything boils down to planning. Everything boils down to preparing. Everything boils down to be ready to shift and pivot when things hit the fan. I know that we were not prepared for what the world in general it's going through, and nobody knew what was going on. Nobody knew what was going to happen. We thought that back in December, November, December, January, when things were getting worse and worse in China, the world was not preparing. We had no idea of the magnitude or the scope of the impact that this was going to happen. Now, it's my belief that most governments reacted based on emotion and based on what they thought it was the best for their citizens. Now, at this same time, we have, as a world, more data and more information as to the consequences that this virus or this situation is bringing. I think that some uh, governments are taking extra precautions, ignoring the economical fall that this is having in general. 28,000 people being let go from the Walt Disney organization for the theme parks area, their vacation club. Um, and that's not including. I was actually today a blog direct Walt Disney organization is that that's not including people that are in the unions. So we're gonna have to see how many people that are unions are going to be let go. Only 28,000 are going to be let go that are not union. It's hurtful, but those type of organizations are ready, are prepared, or they have prepared to pivot as soon as they can, and that's not going to stop them, and they're going to move forward, and we should do the same. But again, I come back to planning, planning, and this brings me to today's topic: tax planning. Tax planning, it's not tax evasion. It's not. Tax planning is a tool to help you reduce your tax liability. And you can go around with the top, let's make it very short. Let's just go around the top 500 Fortune companies in the United States. I'm not going to say the world. And if you were to ask every single CEO, do you do tax planning? Do you like paying taxes? Do you pay taxes? I am mostly certain that 99.99% of them are going to tell you, yes, we do tax planning. We don't like paying more taxes than what we need to based on our tax planning, and we do pay taxes. Remember, income tax, it's not the only tax that exists. Corporate tax, it's not the only tax that exists. There's a lot of ways, there's a lot of taxes that we cannot get around. Payroll tax is one of them. We have to pay payroll taxes. Every company that has employees pay payroll taxes. There's no way around it. Let me tell you about that. Property taxes. There's no way around it. Sales tax. There's no way around it. State taxes. If you don't do, you're fucked. So there's income tax. It's not the only tax that exists. Corporate tax, it's not the only tax that exists. So I bet you whatever you want that 99.99% of those CEOs from those 500 top Fortune companies in the US are going to tell you that they have some sort of tax planning done for their companies and for themselves. Many of us have been in the position where we hire a tax preparer at the end of the year. They prepare your taxes, and after they complete the return, that let you know that you have a bill to the IRS. I just finished a tax return from a client that we do tax planning. His revenue this year was, and I'm saying this, it's for 2019, was $1.5 million. His income tax bill, it's $329. It's a little bit less than $150 that Donald Trump, they claim he paid. Why? Because we know the tax code. We know the tax law. We planned. Whenever you go to your tax preparer, April the 10th or April 15th, here's my documents. Hey, here are my tax documents. Can you prepare me my return? And then you call them 10, 20 days later, whenever you promise them, and say, hey, you owe $20,000, but why? Why do I owe $20,000? Do something. Well, unless we do tax evasion or we underreport your income or overstate your expenses, or I don't have a Harry Potter little wand that I can turn back time, nor I'm Cher to sing the turn back time and help you plan accordingly for 2019 to help you not pay taxes. But the day off, I can't. It's impossible. Trust me, we don't have a time machine yet that we know of, unless you are in the Big Bang Theory, and that machine didn't even work. So how can I do it? How can I help you if you are not proactive? Your tax accountant, your tax advisor, it's there to help you, right? He can do or she can do as much as they can by letting you know, hey, send me this, hey, send me that, hey, send me this, hey, send me that, 2, 3, 4, 5 months prior to the end of the year, right? We have a client. They just send us their documents 3 weeks ago, like a little dropper. One document here, 3 days, 5 days later, another document here. A week later, it happened here, and they want their tax return by the next day after they send their last tax document. It doesn't work like that either. Now they don't want to pay taxes. It doesn't work like that either. We have to prepare, right? And not only for you, most importantly, for your business as well. Isn't it frustrating to have to pay the IRS when you might have not had to? What if I say, hey, if we would have done this and this and this, 2, 3, 5 little things, we could have saved you those $20,000. Do it. Yeah, we can do it for 2020. Still, we have 3 months left. We can still do it. But we can't do it for 2019. That is why tax planning, it's so important, and it's all about that. Preparing, projecting, figuring out what and where to do so we can minimize my tax impact at the end of the year. Tax planning, it's the process of looking at various tax options to determine when, whether, and how to conduct business and personal transactions to reduce or eliminate tax liability. Those people out there that are telling you, don't open a LLC or an S corporation until your revenue is over $250,000. They should be just keep quiet, because quick mathematics tells me that, let's say that your revenue is $250,000 this year, okay? But you only, and I'm pretty sure that if you're a consultant, a service provider, your cost, let's say that your cost, it's only 50%. So if we divide 250 by 2, you have a profit, $125,000. By not having an LLC or a corporation or being taxed as a small business, you are going to be paying $20,000 minimum on that $125,000 profit. That's not counting tax. That's only self-employment tax. $19,125 in self-employment tax by following the advice of don't open a corporation or an LLC, tax as an S corporation until you make $250,000. If they give you that advice, they should pay you those $19,125,000 in self-employment taxes for bad advice. That's what they should be doing, because they know nothing about the tax planning. They're fucking over. Wouldn't you want to save $19,125 just by creating a legal entity and being taxed properly? I just gave you a nugget that will help you save thousands of dollars right there and then. It's all about planning. It's all about planning. Tax strategies are available to small business owners, and it's not tax evading. This is not a tax loophole. It's in the law, written. It's not my interpretation. Some are aimed at the owner's individual tax situation, and some at the business itself. Every entity, a trust, a state, an LLC, a corporation, an individual, a partnership, and I'm just saying the very basic ones. They all have a chapter in the tax code that tells you what to do. The recipes are there. You just need to know how to read that recipe. You just need to know how to prepare the recipe. It's right there in front of you. But if you don't know the law, the tax code, the interpretation, the circulars, the notices, you can't use it. I can give you tons of names of recipes. The thing is that you're going to Google it and you're going to find 20 ways of doing the recipe, and neither of them are going to be correct, because maybe neither of them have gone through the process of validation. Just think about that. The process of validation. Some are aimed at the owner's individual taxes. Yes, you as an owner pay your own taxes. And some at your business. LLC, corporation, however your tax as your LLC, as a partnership, as a pass-through, as an S corporation, whatever. But regardless of how simple or how complex a tax strategy is, it will be based on a structure, the strategy, with a professional. Google, it's not a professional. YouTube videos, not a professional. To accomplish one or more of this, often goals. The first and foremost is reducing the amount of taxable income. That is the very first strategy that we need to look into. How are we going to reduce your taxable income? Because that's where we apply the percentage of the taxes that you have to pay for income tax or corporate tax. That's the very first, right? Then that lowers your tax rate. Corporations are a little bit impossible because right now we have a fixed tax rate of 21%. Prior to the new law or the new amendment to the law, it was 15% for the first $50,000 of profit and so forth. It was a step. Control the time when taxes must be paid, helping you with cash flow. Okay? Second, claiming any available tax credit. Any available tax credit. Let me give you one. Let me tell you one thing. Your tax base, or the amount of tax that you pay, it's based on your taxable income. Your taxable income includes deductions. Every single deduction on your revenue, on your income. Okay? From that result, which is your taxable income, you apply the percentage of your tax rate. Then you're going to subtract any tax credits. Tax credits can be refundable or non-refundable. Most of us, we get a refund because sometimes we qualify for the child tax credit, that it's refundable. Earned income credit, that it's refundable. Okay? That's why you get a refund. Maybe you've never adjusted it, your W-4 with your employer, and now you're married with 3 dependents. So guess what? They're withholding you taxes more than they should. Maybe you like financing the government for free. Who cares? It's up to you. I like my money to be working, to generate income, to generate interest, to work, to grow. But maybe you like financing the government for free. It's up to you. Review your W-4 every time something changes in your household. Review your W-4 once you finalize your tax return. It's very important. Also, controlling the effects of the alternative minimum tax. Shit, this is a little bit complicated. This is a little bit complex, but people that have a lot of deductions that itemize, not everybody itemizes. Okay, not everybody itemizes. So if you are charitable contributions, your mortgage and things like that are not over a certain threshold, you don't itemize. Unless it's higher, you do. Okay, so if you itemize, if you go and say, hey, my deductions are this, 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 and this, and this, and this, and they're like $60,000 and so forth, you might be paying also alternative minimum tax because the government penalizes you, that's how I see it, for taking too many deductions. But that's up, that you can do it legally, but they say, hey, since you took this much deductions, we're going to tax you a little bit more with the alternative minimum tax. Okay? So you need to plan for that. Although each person's situation, it's extremely different. Everybody's situation is different. Everybody. Your comadre, your compadre, your neighbor, your mother, your father, your grandparents, your kids, your cousins, everybody, it's different. Don't listen to what they do. Everybody is different. You might not qualify. It might not be your case. One number, just by one number, everything makes the difference. So everybody different. There are some strategies that you can implement to help reduce the amount of taxes you pay to the IRS and therefore to the state of California. Because everything from the IRS, and if you are in California, everything from the IRS tax return flows into your California tax return, your state's tax return. So you'll save on both. There are just a few of more widely used business tax planning strategies. Okay, so here it goes. Make sure you have correct entity for your business. I just told you. Many people have an LLC. That's amazing. Great. Good for you. Kudos, because you're protecting. But do not have the correct election on their taxes. Make sure you talk to a tax professional, call us, to make this happen. You might have an LLC tax as a pass-through entity. Amazing. You're still paying 15.3% self-employment tax. Do you know that? Maybe you're paying as a partnership. You're still paying 15.3% employment tax. Pass-through entity, K1 partnership, it's taxable as a self-employment. Have you ever thought about tax as an S corporation? You don't have an S corporation. They don't exist. S corporations are not a legal structure. I'm no attorney. Consult with your attorney, but they're not a legal structure. They're a tax election. S corporation, it's a tax election. Okay? Review and write off bad debts. If you have clients that have failed to pay you, you may have the opportunity to take a deduction on those debts. This will help you reduce your total income. Now, discuss this with a tax professional. Call us to make sure you can implement this tax strategy. Let me tell you one thing, and this is super funny, and I apologize if I offend anybody, but people, the sales that you don't make are not considered bad debts. No, they're not. They never materialize. They're not a bad debt. Oh, I was planning on selling to this person. Can I write it off? Dude, come on. Do you invoice it? Did they close? Did they say, yes, we're going to buy it, and you send it and you deliver and you provide an invoice and never pay you? That's a bad debt. If the sale occurred and they never paid you. If you deliver the products, if you deliver the service. If not, you just void the sale. It never materialized. It never existed. That's not a bad debt. Oh, I threw a webinar and 100 people showed up and none of them bought, so I'm going to write off $10,000. No, you can't. Does that make sense? Bad debts, in order for them to be write off, you have had to deliver the service or the product, and the client never paid you. But you made efforts and attempts. You must prove, in case of an audit, that you did everything in your power, not just like send them an email, hey, are you going to pay me or not? No. 30, 60, 90 days, a letter here, there, like a true effort, like really a true effort to collect that debt. Also, you can contribute to a benefit plan. This contributions could be 401k, healthcare, or other benefit plans will help you offset your tax bill. There are a wide variety of strategies that your tax professional can help you with. Call us. We can put you in touch with several financial advisors where we can strategize and help you either eliminate some tax liability or defer some taxes. And I am saying a key word here, deferring taxes. Whenever you contribute to your retirement fund, okay, you are actually deferring the taxes on that income, meaning you're not going to pay the taxes on that year. You're going to pay the taxes nevertheless whenever you receive that income from that fund. If you take it out before your retirement date or age, you're going to get penalized. Right now, based on the current situation, there's CARES Act. We can withdraw it, but we have to replenish it again without a penalty. You're going to pay tax. So beware. Consult with a tax advisor. Call us. Overall, you need someone that will help you plan your taxes versus just preparing them yourself. I've said it millions of times. Really, if I have a heart attack, I am not going to perform open heart surgery on my own. I am no cardiologist. No. I'll probably go to the cardiologist. I'll probably ask, hey, call 911, take me to the hospital. I'm having a heart attack. Oh, no, let me help you. Let me help you. Here, I have the paddle. Boom. No. You're not going to do it unless you are a trained professional that you can do so. Don't wait to the last minute, people, to plan out your taxes for the next years. Don't wait. Stop spending money that way. You're just throwing money. Really. You're just throwing money. That's my belief, though. If you're overpaying taxes, which most of you are, you're throwing money away. What if we can save you $10,000 every year or $20,000 every year, that instead of paying them in taxes, you invest them? And instead of giving that money away for free, it generates you interest, dividends, capital gains. We'll have an issue of paying taxes on those capital gains, but you still have money invested. Who cares if we pay capital gains on money that you were going to throw out? Literally, because you're never going to see that money back. Just think about that. Tax planning, it's a complicated process, and you really need someone that can create a plan that would not only save you taxes, but put your business on a clear path for growth. What would $20,000 more in your bank account would do for your business? Marketing, sales, growth. Marketing and sales go like this. They generate growth. I don't know, maybe if you have a great marketing plan and for every dollar you 10x it, imagine what would you do with 20,000 of those dollars. 10xing it. Imagine that. I would love to give you a free second review of your tax return, personal and business. So visit invictus-advisors.com/shark to sign up for a free second opinion of your tax return and your business tax return. We just got a new client a couple of weeks ago, and we've saved her close to $100,000 in taxes in the last 4 years. $100,000 that she's not going to have to pay. No, she's not going to have to pay $100,000 because we helped her. This is review not for people just looking to get more back on their tax returns, but for someone that is really, really ready to grow their business through proper tax planning. Don't call me if you want a refund on your personal tax return for $100, $200, $300, because you are it's not feasible, right? Because actually tax planning there has a cost. Tax amending has a cost, and it has to be cost beneficial. Okay, if we're going to get you $100,000 in refund, yes, we'll touch your tax return, we'll review, we'll plan, yes, but it's not for everyone, and you must really, really want to grow. And I'll ask you key questions to validate your wish and desire and plan to grow. Not just because you say you want to grow, I'm going to believe you. No. One thing, it's looking at your numbers in your tax return, and with that, I'll be more than sure know if you really want to grow or not. If you're willing to invest your time and resources to grow. We would love if you take a minute to share our Facebook page? Here's how you do it. Under the blue book Now button, you will see 3 little dots. Click the 3 little dots and select share. Wait until the create post pops up here, and type in what would you like to say about our Facebook page, then click post. This will share our Facebook page with your friends. We appreciate you a lot by doing so. So, it's been a fun day. It's been a fun lunch with the shark. I think I've said a lot of things that are going to make you think. I think that I gave you a couple of examples that are going to be like, holy shit, I'm paying a shitload of taxes that I shouldn't be paying. You're going to be questioning your current accountant, your tax preparer that you only see once a year, and you want them to do miracles, or your tax preparer that it's not even here in the US. So, today's quote comes from former Associate Justice of the Supreme Court of the United States, George Sutherland. He said, "The legal right of a taxpayer to decrease the amount of what otherwise would be his taxes, or altogether to avoid them, by means which the law permits, cannot be doubted." A Supreme Court justice, it's telling us, utilize the law. It's checkmark. And you can do this by tax planning. Thank you so much. Good afternoon. Bon appetit. Ciao.
Thank you for listening to Lunch with the Shark. If you would like to set up a consultation with the Shark CFO, Vidal Espinosa, visit his website www.invictus-advisors.com, and don't forget to subscribe on Facebook, Instagram, YouTube, Twitter, and LinkedIn.